Okay. All right. Well, Preston, welcome and thank you so much for taking the time to chat with me today. I guess to get us started off, why don't you just tell us a little bit about yourself and where you're at in your real estate investor's journey at this point?
Absolutely. Thank you so much for having me. I'm excited to have the chance to talk to you today and share a bit of my story and get to know a little bit more about you as well. I am a real estate investor. I've been through a couple of different paths, primarily in apartments and as a broker or as a sales agent is a better way to say it. Worked for a handful of companies, including Century 21, and I've worked for some now public companies and have worked for several private groups.
Okay.
So my real estate journey, I like to joke, started as a little kid. I would work for my parents, my dad and his brothers and my grandfather got into the apartment business in the call it late 70s, early 80s. And they had moved from Utah, where they were from, moved down to Dallas and different parts of Texas, and bought initially some smaller, I would say that they were foreclosures in a sense, but they were bank-owned properties, and would fix them up and sell them and rinse and repeat. And then after a very short period, split and went off on their own ways. So my memories as a child are limited necessarily in the real estate space, but I would get tasked, assigned to go help get units ready, to go through the make ready process. And as I was a little older, I would go help and, we'd take over a property, and on the transition day, I would help set up computers or help clean the office or help assemble furniture if new things were bought,
Okay.
walk vacant units. And so I grew up exposed to real estate, and for most of my life said, hey, I'm going to be involved in real estate in some period of time.
Okay. And you said small properties in Texas, but you're in Texas, right? Everything's bigger in Texas.
There are quite a few number, relatively for me, I guess. I guess they were definitely not necessarily fourplexes, but they were not institutional properties initially. As my career progressed and as I moved more full time into the industry, I worked for my dad for a period of time. I worked for some other individuals, and then I joined a kind of a large institutional buyer who is in the top 50 current apartment owners in the United States. Worked for them for a period of time, bought and sold exclusively apartments and primarily in Texas, and also through the Midwest and a few other places. Bought what they call institutional apartments, institutional multifamily, meaning usually 200 units or larger in a single community. And I've been through that process and was happy to have that opportunity to work with them, work with some great individuals.
Yeah, it sounds like you've had experience with the whole gamut.
Yes, it's been fun. During some of those times too, I helped refinance communities and properties, so got some experience with banks and lenders. I know we're recording this in call it the fall of 2023, and this year has been very interesting for a lot of the commercial banks. They've been with some of those shell shock with like Signature Bank and Silicon Bank and a few of those banks that went under. It's been very difficult to get loans, and so it's interesting to operate in a rising interest rate environment where lenders are tight with their money, and so it's one of the challenges that we're facing right now is how do we get deals done when banks are tight on their money, interest rates are high, and that's why I'm kind of attracted to some different groups, including the Pace Morby's group and the Gator method and the opportunities that they have to creatively structure deals where you don't necessarily have to go directly to the bank, but you can work in concert with the bank and other investors to still get opportunities done and to close deals.
Sure. So in all your experience, you're still currently working for a company, but have you done things on the side individually as well?
I have a couple of single family homes. I don't own and haven't owned individually any properties all on my own, but I have been what they call an LP or a limited partner in a handful of properties. And in a way, it helps me understand the operations of a diverse set of funds, a diverse set of apartments and metrics and things like that. Different partnerships allow for different insight into the property operations. And so by being a limited partner, I get some exposure, but I'm not a significant owner in any means of that.
Okay.
But it does give me the opportunity to say, I own a very small part of a few thousand apartments,
Oh,
throughout the United
yeah.
States.
Yeah, I mean, I know Pace has a program that he does, Invest with Pace, and it's pretty similar. You can put money towards some of his funds, and then he kind of helps you learn the process and help you get involved just so you can see how deals happen on the back end. So I mean, it sounds like a great way to gain experience. So that's awesome that you've already had a little bit of that.
Yeah. So currently on the horizon, the opportunities are, I don't necessarily have a lot of extra money sitting around. I think that's not a unique situation with the inflation that everyone's dealt through. So I'm looking for opportunities to I'm looking for opportunities to find good properties. I know what a good stabilized apartment looks like. I know where you can go in and do value add opportunities. Sometimes it's through management improvement and processes. Sometimes it's through physical improvements to the asset, and sometimes it's through a restructuring of the deal, meaning partnerships, loan terms, and particularly maturity dates. If you can refinance a property, sometimes a cash out refi is good. Sometimes a cash out refi um, is not helpful, and in most cases, the options on the table are not as good on the financing side. And so you typically have to do it through other means, um, typically through management restructuring and processes restructuring or improvements to the asset. So,
Okay. Yeah. That sounds like you would be a valuable asset for anybody looking to get into the multifamily space for sure.
absolutely. And I'm always happy to look at a deal and give you my 2 cents on what I see and or think about the opportunities, and maybe give you an ideas on, hey, did you consider this? Or hey, what do you think about a scenario like this?
Yeah, that's great.
So
So
quick
what,
case, go ahead.
no, go ahead.
I give you a quick case study real quick.
Perfect.
Uh, I was part of a couple of years ago. I was part of an opportunity in San Antonio, Texas. We bought a really nice property. I don't remember exactly how many units it was. Well, let's call it between 250 and 300 units, primarily 1 bedroom and 2 bedroom apartments. And we were doing and had planned as part of the acquisitions and at the time of purchase, we had planned to do a light renovation or kind of a light fix and flip type as the units vacated to to increase the revenue. So it's like a value add program designed to increase rents, and also complete some deferred maintenance to make the expenses so it preserves the asset longer.
Sure.
What we found out during kind of this case study in San Antonio is that as we were changing the older white and beige appliances to black appliances, that people would like the new fridge, but the color of the fridge itself didn't always necessarily mean that they were willing to pay for the incremental cost to move from white to black. And similarly, from black to a stainless steel appliance, it was the fact that the appliance was new. Similarly, on the flooring, we found that residents would pay for the privilege or the opportunity to live in primarily vinyl or without carpet units, that there
Mm-hmm.
was a premium associated for those. And then we also found that the carpet would, as it would wear out, it wouldn't last as long as the vinyl. But we were able to quantify those numbers. And then we were doing other things like replacing the cabinet fronts and changing all the brass hardware into brushed nickel. And we're putting 2-inch faux wood blinds as opposed to just kind of the simple plastic 1-inch blinds.
Yeah.
And as we went down there and isolated and analyzed the data set and got to it, uh, again, a lot of people involved in this process, but as we put our heads together and tried to come out and find the best answer so that the best answer in the community would win out, we pared down the roughly $4,000 we were spending and cut it down to just appliances and just vinyl flooring. And by focusing on just those two changes to the units as they came up organically and available, we were able to get much quicker through the renovations. We were able to renovate more quickly, get them occupied more quickly. And maybe we didn't get necessarily 100% of the premium that we were aiming for, but we would get 90 or 85% of it. And so the trade-offs were extremely worth it as we got into the market, got detailed into it, understood where the demand was and why, and then tailored the approach as we move forward. Of course, things like appliances and flooring would change out, new supply, competitors doing things would always change those. But in that moment, we were able to really identify the value that renters wanted, give them what they wanted to, and get paid for it in a way that it drove real value to the bottom line, to the distribution, to the valuation of the property. And then we were able to successfully exit that property earlier than we anticipated and still hit the target number that we had anticipated, which ended up being a win-win for everybody.
Yeah.
Investors got the total amount of money they needed and faster. So we said, hey, let's do that. And then a lot of the investors in that situation turned around and invested in the next opportunity as well.
Yeah.
Not necessarily through a 1031 exchange. So.
That's awesome. That's, it reminds me just of, you hear all the time, professional athletes, they get to the point where they have, little tweaks in what they do, and it is what pushes them over the top or what makes them stand out above others, even that are on the same playing field as them. It's like those paying attention to those minor little things can make a really big difference when it comes to playing in the big leagues, right?
Sure. Absolutely. You hit it right on the head.
Yep. So tell me right now, what do you think is and this can be in the company that you work for or in your personal investments and what you're trying to do more on your own. But what do you think is one of the roadblocks you're hitting, or something that you need right now, or that you're searching for?
So I'm looking for a way to be involved in more opportunities. And I say it in this way is I would like to find not just opportunities in my current job. I'm very happy with what I do. I love apartments. I love the apartment management game, and I don't necessarily want to be the on-site property manager, but I do want to be involved in the improvement and creation of value and finding a way to maximize where residents, the employees or management team, if it's in-house or externally contracted out, and the owners. So, owners, employees, and residents, where we can hit that kind of trifecta where we all are benefiting together in a way that substantially rewards each of the parties, and primarily the people who put the money into the deals, because it further creates the opportunities for more opportunities or for more deals to be done. So that's very vague. So if I can kind of make it a little bit easier, I don't necessarily have a ton of money today to do things. A lot of it's tied up in existing properties. I should have some more funds as we move forward. But if there's someone who needs expertise, if they're looking for, I would consider my primary role to be as an asset manager, meaning I can represent an ownership group who may be busy, doctors, lawyers, other real estate investors who want to focus primarily on acquisitions. And in lieu of just handing the property over to a property management company, as an asset manager, I represent the best interest of the ownership group, and I can call BS occasionally when some property managers will say, hey, well, we should only charge $1,100 for our rents because it's easier to rent something lower. Mm-hmm. Or, hey, we need to replace the HVAC, or, hey, we need to replace the carpet. And in some cases, these are decisions that are pretty straightforward, but as examples, but there's larger things. Should we protest the taxes this year? Should we reshop around for an interest rate? Should we reshop around for an insurance provider? What are the norms for how much do you typically pay somebody in payroll if you have somebody dedicated full time on the team? I bring a kind of a body and wealth of knowledge related to what institutional quality apartments should operate at, and can kind of call BS as or work with different property management companies or individuals and say, hey, this is what we think should happen. And I can say, no, you don't necessarily need to do that. Or, hey, that's a great idea. Let's do it full speed ahead. And I can kind of provide that knowledge and insight to unlock opportunities to increase yield eventually, which is what everybody wants, more cash flow and higher values.
Yeah.
So that's one thing that I can help with. Alternatively, if there's a need to develop apartments, I've been going out and getting loans for groups that don't spend a lot of time with it. It's something where you want to make sure you use appropriate licensed legal professionals, but I can act as a consultant to help facilitate loan refinancing restrictions, or even, hey, I've got a property and an asset that's got a high interest rate. I kind of stuck. I don't know what to do. The property management's not really making headway one way or the other. We can come in and kind of act, or I can act as a consultant and come in and help restructure, or give you an opportunity to say, hey, this is the optimal path to grow, to maximize your exit strategy based on whatever the needs are for you.
Okay. Yeah, that sounds great. I mean, it sounds like you would be a wealth of knowledge for sure. If somebody were to want to work with you, how would they be able to reach out to you?
Yeah, so I'm working on getting my socials out there. LinkedIn's probably the easiest way to find me in a professional sense. Preston Jacobson, and I've got a brand new YouTube channel that's in process of being created, and then you can find me on Facebook and Instagram, Preston Jacobson. I am not the wrestler from Idaho or Ohio, but yes, I'm the guy in Utah these days.
Okay. Well, Preston, it has been a pleasure. I really appreciate you taking the time to come and chat with me and to let me know what you're into and what you can offer for everybody and what you're looking for as well. So thank you so much for your time.
Thanks, Annie.
All right.